All right, welcome everybody to the Bookmap Academy. This is the meeting we do every Thursday. It's been a little thin lately because people away on vacation and coaches were away as well. So anyway, what we do in here in the goal, the introduction, is it's a program where there's no cost to it. Anyone can join. You will have to register on our website for it so that you can be verified inside of our Discord to attend and partake in it. And then you will need Bookmap in some way, shape, or form. You'll need to at least have the free version, and you can mark up your charts on that and get some. If you're very consistent with it, we will cover it. We've done that in the past, and that's fine. Most people have Bookmap paid version. They're looking at live market activity, and they're getting the most out of their feedback from the coaches and from the others in the Bookmap Academy in the chat room. Anyway, the program is right here on bookmap.com. If you're interested in joining, and go to more on the more button here, and then you'll see Bookmap Academy under here. Okay, and you can sign up here. You can read about it. You can get Bookmap for free as you go through the process and become really good. You can become a coach. You'll get free data as well. We're willing to help along the way and give back as you give back to others, and give back to yourself in the journaling process. You can become a Bookmap streamer. Anyway. That's the program, and this is the process we use, journaling, to build our playbook. 1 through 3 in here we really don't cover very much. We really drill down into your setup and execution. 1, 2, and 3 though are vastly important. Number 1, what moves the market, the impetus, and then the key levels. Especially on the higher time frame, the key levels. Where are traders reacting? Where is price accepting or rejecting? And then we start to filter through scenarios and strategies about, well, I'm seeing this at my key level, and due to the news or geopolitical ongoings. And then we start to filter previous high of day, low of day, overnight, time of day, VWAP, maybe market profile, etc. And start to really kind of drill down into the key levels and build out the scenarios. If this happens, I'm looking for that. Then it fits your setup or it doesn't. You have a setup for this scenario or strategy, and then it comes down to, this is my checklist and my setup. This is my execution. This is how much I'm going to determine of a good setup it is, and how much risk you want to put on. This really comes down to your execution and your setup. That's it. So this part is actually the simplest in essence, because you should know it, and you should be an expert in your setups. The filtering process brings the context to your setup to make it more or higher probability. All right. Now, if you need help on your setup or building an edge, if you don't know if your setup has an edge, that's why we developed this. It's kind of a sub program within the Bookmap Academy called Bruce's Pilot Program, and this is about focusing only on one element, and that is building a trading edge, because this is the foundation for it all. If you don't have an edge, and you don't know if you have an edge, nor if you don't know the process or building an edge, then you should not be trading. Unless you just like playing the market and throwing money at it, then go for it. But if you want to build an edge or learn the process, then you can join this program. We designed this because I've just seen so many traders in the academy and throughout the years not have a process, not have an edge, but they'll understand their setups extremely well. They just don't know if they work. Then they just move on to another setup, and then it kind of works, it kind of doesn't, and then they move on to another setup. So this instead really builds out the data as well as your experience of that setup and putting it into context. So it has a structured process, it's measurable and testable, and it's interactive. It's fun, I think, and it'll really tune you into execution, and you can speed up the replay mode that we use heavily, so it's very fast as well. If you're interested in that, that's easy to sign up for. You will need to have Bookmap Global Plus, but go to the More button here, and then Bruce's pilot programs right underneath this community or Bookmap Academy here. Just click on that link, and you can apply here. Okay. Again, you will need to have Bookmap Global Plus though. All right, so that's that. Let's get into disclosures and we'll jump in. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only. It should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so let's jump in and let's see who do we have here and who do we want to go over. So let's see, just a minute. Okay. PMAG, it's been a while. Moby covered you. So let's go over your trades and bring you up. And let's see, we got other guys in here. So other guys, we'll go over you. Like I'm not going to list them, but there's some other traders that are here right now, and we will cover you. You know, if you've made content and put it into the spreadsheet. Anyway, all right. So let's see, PMAG. What do we have here from Mobile? We got 3 different trades. So we've got. Let's see, this one looks like the trendline break accumulation. This is a low volume pullback, and this, I think I remember this was some sort of CVD thing that you were looking into, I'd like to kind of pause on that one. I know this is something specific that you are looking into, but let's get into some of the meat and potatoes first, and maybe we'll start with this low volume pullback, so let me, the way we're doing this, our process in here, so the coach goes through it, gives some feedback, then let the trader respond, and then we turn it over to other coaches. Let's see here. Okay. So, all right. So I see you graded your trade. There's a couple of other elements in here. I can kind of see the absorption exhaustion in here. But PMAG, you might want to, what you can do is you can drag this out, extend it to the right, and then you'll be able to see they won't return on a second line in here. Because I can see your resolution is pretty low on your, I guess it's a laptop or I don't know, a screen where you have very low resolution, or you bumped it up to that low, bumped it down to that low resolution. Anyway, the rest of this setup looks great. Boy, okay, so like here's your structure. Here's an impulse move here. Here's your structure. Here's another impulse move, a pullback, and then you're looking for that continuation move. Yeah, looks good to me. There's kind of and this was in replay mode. So yeah, exhaustion. I don't know if that's necessarily exhaustion. Looks like there might be a little bit of exhaustion down here. It kind of went sideways for a bit, but your entry, I think, is excellent because you can see that we have the impulse move, right? We have this kind of sideways basing. There's not many sellers. You note that here with the pullback. Very little selling. You're seeing more buyers come back in here, and you're looking at this high liquidity. Is going to trade right into this high liquidity, either here, or both. And then in this case, you let it run up to another area up here, above the figure, because the figure is right here with all that liquidity, right? And then you moved your profit down a little bit. You trailed your stop loss up like this. You note the skew here. You're doing great. I mean, this is great. And pulse move away from structure. Yeah, I mean, you're identifying it. So I just keep going. And now this is where it gets kind of tricky. And then I'll let you speak. Is the these variations in it, and also time of day. Whatever the situation is, higher time frame. But this is it. I mean, you can see. Look at the volume dots. Look at the even this structure here is just basing and breaks out again on high volume. This is great. Everything in here I think is aligned, and you won't get much of a pullback at all. You do see the low volume node, and then you just kind of wait for more buyers to come back in and just ride it up. This is fantastic stuff. So if I had any kind of suggestions, yeah, not really. I mean, maybe more aggressively traded up. I know that we have a very specific stop loss trail protocol in here, but this would worry me about hitting this high liquidity and then maybe coming back down and trading into here. You don't get it. All it does is base yet again, and then you can see it does curtail off the buying, but the buying is super strong in here. Yeah, I don't really have too much to add to it. Would love to hear your thoughts.
Hey guys. Hey Bruce, can you hear me?
Yes, you're coming in loud and clear.
Appreciate that. I appreciate the words you hear. I mean, basically, the TLBA and the LVP are well defined in the academy. Basically, there are 4 or 5 criteria, and you know what you're looking for, and you just need to repeat again and again and again. And at some point, you get it. And I think I made a lot of improvement, at least the way I see, because at the beginning I didn't understand the rules. And later on, while looking at other people trades, listening to coaches' comments, for example, at the time, trading is what was it? Trading is life, and also Laura, which look at this LVP setup from different configuration, because trading is life is in I believe is in a proper firm, right? And Laura told me, why you stop here, for example, why you don't take it all the way where there is liquidity. And this chart actually basically, you know, demonstrate what Laura was telling me at the time. Don't stop here. I mean, you have a lot of liquidity up there. Just pull it all the way up and make more money. And you're right, it's in a replay mode. I don't think that I'm yet in a position where I can do the same thing in forward trading, but I'm getting there
Yeah.
slowly but surely.
Yeah, absolutely. I mean, it's interesting that you say this. I mean, because really, what you're saying is like, yeah, I kind of got it, and I totally agree. There's really not too much to go over here. It's I think forward testing would be good for you. Keep on hitting replay like this, because in the end, when you jump into the forward testing and the live trading, it's if you stay on with replay mode, and you'll have to, even in those phases of the pilot program, you always go back to replay mode, and you're always going back to replay mode no matter what,
Mhm.
because what that helps you do is you look at the market differently. You just sit and wait for what you know, instead of
Mhm.
hacking it up into, well, it's kind of doing this, it's kind of doing that. Well, maybe I should get in. Oh, I'm I might be missing out, or you know, instead, no, you just you wait for the market comes to you, and you're playing your game, and that's when your decision making, I think, becomes a lot better as well.
I appreciate that. Thank you.
Yeah. So anyway, let's see here. Else do we have in here as coaches? Kind of thin on coaches again. People away for summer. Shark, turn it over to you. Any feedback here, Shark?
I just have to agree with you, Bruce. I think all the check boxes, all the boxes are ticked. Um, the setup is here, and I think you traded it. I think you traded it good, PMAG.
Okay. Um,
Yeah,
Appreciate it, Sean.
there's not much to add to what you said, Bruce.
okay. Let's see. I think I'm going to invite a couple other pilot program experts up into the chat here as well. Tommy, if you would like to join, if you have any feedback or comments here, and let's see, Nan or Tabo. I mean, God, we got so many guys, and you guys are all doing great. Nan, Taboho, Mayor, and yeah, even Becker, Vinfra. Nice to see you in here, Vinfra. Let's just start with we'll just keep it with Tommy right now, and move forward here, and then see if maybe you other guys would like to join in too. Tommy, any feedback on this?
Yeah, I mean, the only thing I want to add is when you look for the low volume pullback, I mean, here, when you look at the low volume pullback, it's more like profit taking a bit. So you see the buyers stepping in, and then you see them taking profit. And then in this way, you can see the liquidity imbalance. So, I mean, you can see there's more liquidity above the price, and you see,
Up here?
buyers step.
Oh,
Yeah, I mean,
five?
if you look at
Okay.
the figure, the 7,700,
Yeah.
and then you see like buyers breaking out of that range, and you see where liquidity is, and buyers just take it up there. So, I mean, in this one, you can identify the low volume node, and then you kind of want price to pull back into that node. You want to see liquidity skew, and then that kind of creates an imbalance in the book. So, but in this case, liquidity skew was a nice kind of confirmation for you to stay in the trade, because buyers kind of took on that liquidity, and then you wanted to wait for follow through, and then when you saw liquidity coming in on the bid, and then you saw like more buyers, so that was a great sign for you to stay in the trade. When if price trades up to heavy liquidity, and if you don't see a follow through, so it kind of slows down and sellers stepping in, you should be out. But in this case, you saw more buyers above the liquidity, and you saw the liquidity skew as well. Normally, like in this one, we kind of want to see the liquidity skew just before your entry. But in this one, the bid was kind of empty. So, I mean, obviously price can always go lower, but like here, there's nowhere to go on the bid. So, you kind of just see liquidity above the price, and you see buyers, and that's the trade. You don't really see a lot of things going on the bid. So even if sellers would step in, they probably wouldn't be able to bring it down anywhere, because you don't see anything on the bid. And that's the only thing I wanted to add.
Yeah.
Awesome, Tommy. I appreciate it. Thank you.
Yeah, I think good points. Another thing too that I think is a great point here is the right in here. Like we've covered this many times before, that a lot of times you look for that low volume pullback, you get it, but then there's really high liquidity right in here in front of you, right? In this case, it's up here above. So this is so you do have some room. I mean, it's not much. It's only a few points, right? But that's okay. I mean, I think what you did, PMAG, was great, because I think your execution here is really good, because you're following the plan. You execute well. I think you probably, here's another maybe some feedback. Your stop at this point, I think you could have moved it up pretty aggressively. Maybe, I mean, this is all hindsight, of course, right? But once you start to see this in here starting to pick up, and you've got all this volume, to the upside, you know, I'd be looking for a pretty quick move up into here, and it is rather quick, you know, but you know, keep that tight stop. If you get stopped out, if this does something like this, you know, and then, you know, you get another like big, you know, volume dot in here, I mean, you can take it again, you know, if as long as you still have some room to run, and then, you know, take it up to here, and then maybe even further. Yeah, you're taking on some extra risk here. That maybe that's something to consider, tightening up.
Thank you.
Yeah, sure. Let's move on, and we'll go to the trendline break accumulation. Oh, it's also a low volume pullback. Okay.
Yeah. Can
Right.
we do the other one if it's possible? Because
You want to go
the
through
one with
the
the buy sweeps, yeah. And the reason, well, yeah,
okay.
yeah, that's the one.
Okay. Let's see. So this is your own criteria, and oh yeah, I mean, since I'm already reading this about the aggressors in here, kind of there's something I wanted to mention before about this one in here, is I just think again and again, like, I mean, this is such a good trade or such a good setup, because you're riding the momentum, and it's a continuation trade, and there's always pauses in continuation before the continuation reoccurs. So no matter what kind of trading style you're using out there, I mean, this is, you can call it a flag, you can call it a, you know, a break of a small range, whatever it is. I mean, you're going to see this over and over and over again. So it's a good setup to go through, and one way or another, it's something to deal with in the market. We've only got 4 criteria for it, trying to keep it simple. So this is the similar thing here with the CVD move, and here though, you know, it's hard to kind of see for this kind of move in here. There's a lot of things I would like to look for, and I can't see it in here because I can't see the entire time frame in here, this is, it's basically, it's the same day, and it's also at the same level, and you see this really big spike through it, and then it just, you know, pulls back here. Oh, this is a detail of it?
Yeah, I mean,
It is.
well,
It is. That's right, because it went up to 05 here. Yeah.
yeah,
Got it. Okay.
yeah. If I may, Bruce.
Sure. Why don't you?
Well, basically, yeah, this is not a well-defined trade. I mean, basically, you're right. I mean, the bread and butter are the TLBA and the FVP, and the more you do, the more you repeat, the chances are that you'll be better at this. I mean, talking about myself, of course, and you know, be able to make money. But this one is different in a way that I look. Oftentimes, I look at trades that John is taking. And John, one of the trades that we took in June was basically when buy sweeps uh, failed because there was no liquidity above. It was kind of a void in this trade. And this came out of the blue, and I said, just a second, I'm familiar with this because I saw it before. And I went back to John's trade just to see if I'm getting it. And that's basically what happens. The truth is that I don't think I'll be able to trade it in a real time because it's so fast. Within seconds, I mean, there is a buy sweep and you know, and then it comes back down. So what I did in replay, which is, of course is easy because you can, you know, play forward and back. I tried to see if I can, you know, make sense of this, and I saw this buy sweeps, and I saw that the fact that there's void, you know, on the offer, and I looked up, you know, on using a Copilot, for example, because you know you can define the question and say, okay, in Bookmap, if there are buy sweeps and there is a void, you know, on the liquidity above, what can happen? And then they give you some criteria, and these are the criteria that I went by. You know, if you see a CVT spike, if you see aggressive buyers, if you see an impulse move, which we do, absorb here and etc., then there is a chance, a good chance, or high probability that you'll be able to show there, and the short will take you all the way down to the liquidity, demand liquidity they can see, let's say in 0.9. So again, you're right. I mean, it's not structured. It was more to learn something from some side, from a chart or trade that John took, and see if I can do something similar to that. That's the purpose of it. That's all.
Okay. No, I mean, this is something I saw this earlier in the week, and I thought it was kind of interesting because, from the pilot program, you're starting to it's a starting point to look at something different, and you've got your criteria here in the setup, or at least you're identifying these elements, put it that way.
Mhm.
And that leads into starting to get into a process, and building out a process. So now we've done it with 2 setups in the pilot program. This is how you can start to develop your own as well. And then you get replay files, or now what you need is you need to verify it, and you need to go through it over and over and over and over again, and see if that has an edge or not. Now, I would be it's good. I think that you went through something that John was looking at, and you're inspired by it. It kind of scares me a little bit, just because there's something very specific John is looking at that everything revolves around, and that is the options levels. So he's looking at those options levels first thing, and then he's only trading those levels. So then he's looking for order flow events around those levels. So in this case here, you've got a sweep, but we don't know what if this is an options level or not. That would be the kind of issue. One thing that would be of a bit of concern. The idea of a sweep, though, and then the kind of filling back in here is great. I mean, does it accept or reject above where it swept through? In this case, it's figures actually up here, and then see this trickle down in here. This is the highest point of the auction. No one's interested in taking it higher, and there's some sellers, but there's no more buyers in here, and there's going to be a huge stop run in here as well. And that's a lot of this CVD in here is going to be a stop run in this spike, if you overlay the stops and icebergs. So this kind of trickle back to where it began this happens a lot. In fact, that's the kind of pullback we're looking for in the low volume pullback. And in this case, this is capitulation at the end of the move. Above the figure, but it just kind of trickles back down here, and then it just bases for a while until someone's going to take control. You identify the demand here on the bid, and you can see it kind of narrows here with the offer up here as well. I don't know.
And again, it came out of the blue. I mean, it's not something I expected. And then when I saw it, I said, just a second, someone else did a similar trade, which was John, of course.
Yeah,
that's why I did that.
Yeah, I would just be careful about the because this is such a big move here, and the really knowing the key level, and knowing this is capitulation, and then this is funny. I don't know, PMag, I think I was talking about this on Tuesday in the All Markets webinar, that this is exactly what happens after everyone's kind of cleaned out. And I talked about the Euro Swissy years ago, when they unpegged it from the Euro. They unpegged the Swiss, and massive volatility, and then this kind of just trickling back to where it came from unfolded. And this is the same event in here, basically on just a very, very small example of it. It's just I'm just going over the order flow phenomena and this kind of market event, and that's what I see in here. Yeah, you can turn it into a strategy. I think it gets down into the specifics. Other coaches, Shark.
I have a few thoughts, Bruce.
Yeah.
We're looking at, but without that kind of trailing off at the end, we're basically looking at 2 minutes of price action here.
Yeah.
The question I would ask is, what are our levels coming into this price action? So we have, the 7704.75 right there, where that kind of book sweep rolled over is our ETH high, like pre-market resistance, right? Less than an hour before the open, which is always a pretty strong level. I put that on my chart, and so that's a level of resistance that I would have on my higher time frame chart coming into this zoomed in price action. That same level was once again rejected as resistance shortly after the London close, and then price broke through it and rejected it as support twice, broke back down below, and that's when this book sweep jumped right up to that level and rejected it. So look, when we're looking at 2 minutes of price action, I'd say, yeah, this is out of the blue. But if we zoom out and look at our levels coming into this, I wouldn't call it, just right out of the blue. There is a level there of support and resistance that book sweep went to and rejected almost to the tick.
Very interesting.
I mean,
Thank you,
that's a
Chuck.
fast
I
move.
didn't look at this way, but now I understand.
Okay.
That's my thought, P-Mac. What did price do coming into this move? Where are our levels? Support, resistance,
Yeah, well,
whatever we have on a higher time frame.
mhm. Yeah, Bruce, you mentioned the option levels or the GEX or whatever they call it, and you're right. I mean, basically, I looked at the option level. I didn't include them here. I didn't mark them on the chart, but where there was resistance, there was actually call wall, and where we see the support, there was a put wall. And I think that what John does is really depends on the regime. They call it the gamma regime. There is a positive gamma regime and there is a negative gamma regime, and it's all complex theory. So I'm still in a learning phase. But I think what it does, if it's a positive gamma regime, it just goes between call level and put level, and it's more like of a fade type of trade. It goes up and down, a lot of reversals. And if it's a negative gamma regime, according to what I studied or what I learned, is basically you see more breakouts, so you see more trends and things like that. So yeah, I saw the core level there, exactly where it actually exhausted, the buy sweep, and I saw the put wall there, but I didn't include them because I'm not yet there to show that I can do both at the same time. I'm trying to stick to the heat map and the things that you teach for now, but I'm also looking at what John does.
Okay.
The spot gun.
Okay. Yeah. I mean, this is like kind of classic, auction market theory type of stuff that we were mentioning or talking about earlier. In fact, Zeno wrote, gave you some feedback in here, quite a bit. So I would suggest taking a look at that, because I know, well, Zeno's trading, algorithmically. When he sees order flow events like this, like they're meaningful, and he's able to, because he's able to look for something very specific and then trade it, because the execution from his algo is gonna put this in, which, like you said, this happens very, very quickly, and it can be very hard to trade. But anyway, yeah, he gave you some really, really nice feedback in here.
Yeah, I can see that. Thanks, appreciate that. I will go over this. Let's see, quite long response there. Thank you very much.
And then Tommy, we'll kick it over to you if you have any comments.
Yeah, I mean, probably this one was a stop run as well. So you see the retail getting stopped out. And then oftentimes, like when you get the stop run, and if you don't like if you don't see price accepting above the stop run, you can like oftentimes you will see like sellers stepping in and they will just bring it down to liquidity. Like I know if you'd have the stop run indicator, I know like a few people using it. So basically you wait for the stop run, and if you don't see after the stop run, if you don't see the follow through, then you can kind of look like you can kind of say that it's like a rejection, and then when sellers are stepping in, you can bring it down to liquidity.
Yeah.
That's the only thing I would add, but yeah, good job.
Thank you.
Okay, right. Let's see. Let's move on. And that one, and then since we're here, let's go through it because we're on a good roll here, I think, with the momentum. And this was the it's just so important. And you know, you're on the right side of the trade if you can properly identify this, and it makes things a lot easier. I see kind of both in here, trendline break accumulation or reversal, as well as the low volume pullback. But your execution here on the low volume pullback looks fantastic. So again, you know, you kind of see this. Well, I don't know if it's a key level or not, but you see that price is reversing, and then kind of channeling in here. Nice bump in here, big volume. Away from a small structure here, and then the pullback like this, and then you start to see that buying coming in. Low volume pullback in here due to the this volume in here, as you can see, and then you're waiting again for that volume to pick up, and then push it back up. So yeah, great move, and great. To me, it looks like you had a feel for it in here, because you know, there's still some structure here that it needs to clear, but you're really, you know, looking at this and saying this is significant, and then you notice that, okay, sellers aren't engaged. I see buyers are engaged. I'm getting in. I'm looking for this to break, and then you know, trade it on up. There's actually another little low volume pullback in here, and then you get the continuation move. So yeah, the let's get into some nuances in here a little bit, since you're getting really good at this. Structure break on impulse move and high volume. Yeah, you know, okay, it's doing it. Did it really pull away and accept? Yeah, I think what I see in here, and this is nuanced stuff, guys. It's kind of up to your interpretation as well. I'm just giving mine. You know, it's not a whole lot of points in here. It's 2, and then and it pulls back pretty deep too, almost, you know, full pullback here, and then but I just don't see any sellers in here. Is it possible that you get big seller up in here and then move down? Yeah, sure. But in this case in here, like, you know, you waited. That was great. And you know, I don't know. I mean, if I was being nitpicky, maybe wait just a little bit longer on that one. But because I don't know if it's going to clear it or not. And then once it starts to clear it, you know. Now that's all hindsight as well, but you've really got a feel for it, I think, PMag. So you know, great stuff. I'd love to see that. Again, I would. Are you trading a prop account, or you're trading your own account, personal account, or do you?
No, my own account.
Your own account. Okay. I don't know. Like you might want to consider, like you know, moving that stop up a little bit more. And yeah, you identify the low volume pullback, right? But just consider it and try it in replay mode some more would be my suggestion. is that you start to see this volume come in again, it should break. And if it doesn't, I mean, you can put your stop down here. And if it doesn't, then so be it. Get stopped out. You've got a couple different. You've got a trend line. Usually, this kind of trend line, once it usually starts to hold a little bit. You've got the low volume pullback. It's you got the volume in here, so you got a lot of good stuff on your side for putting your stop, I think, here, and then trying to let it ride. If you get stopped out and it comes back up again, because a lot of times, you'll get the third, or sometimes the third will even fail and it comes down about halfway to like a little point of control in here, and then you'll get the break over here, and that's fine. You can always get back in, but you've got a lot of risk here, to down here, it looks like, right? Yeah, to 66. So I don't know. That's what I see. Let's see, low volume pullback node to low volume node 7. Okay, so you didn't give it a high grade for these. I like that. And absorption, trap volume or exhaustion. Okay, you didn't really mark much up here. Liquidity skew, though, you got that, and then break of the structure on high volume, which was your execution. So good stuff there. I would give this. I think your grading looks pretty good. Again, this is kind of subjective, guys, but over time you'll get really good at your grading, which is the goal, and make it work for you, and then go back and when you document these in the notes column in the journal, you'll have so much more to look at and go, I graded it this. Why did I do that? Run it through these filters with yourself to get better and better at it. So anyway, Shark, how about you? Any comments here?
You mentioned that you kind of see a TLV there in the same price action, and DNT has mentioned many times that the LVP is a fantastic way to get into a trendline break accumulation kind of after the fact. So I just back to the same thing I mentioned before. What do we have on the left? What do we have key levels here? And same thing. Our ETH low is at 64.5, right where price rolls over, and some market structure demand on my high time frame chart at 66. I think it's as far as having some levels there, I think it's a really good place to look for price to reverse.
Yeah.
And I think that LVP there is a really good opportunity to get in on that reversal that's clearly identified by the order flow.
Yeah. I have a question, Bruce.
Yeah.
So it's more related to trend line break accumulation. What I noticed is that if the passive accumulation, which it basically defined as like 3+ levels of passive accumulation, right? But if it's not thick enough, then there's a good chance that what looks like a change in the direction of the trend will retrace. It happened to me multiple times, and I think it happened also to Thibault in one of his charts, that he was sure, like I was sure, that the trend is going up because I met all the criteria. That is the passive accumulation 3 levels, that's the break of the trend, etc., and yet it retraced. It actually reversed. And my question is actually, other than defining it as 3+ levels of passive accumulation, shouldn't we add, let's say, how thick it is? I mean, is it really passive accumulation, or you know what I'm saying? I mean, I'm not sure about that point, because it's kind of difficult. Many times it happens that you have it, and all of a sudden the trend change direction against it.
Yeah.
Does it make sense? Yeah.
Yeah. No, it's a good question. And again, this comes back into the kind of subjectivity of it, as well as the context of it, and it there really is no way to kind of describe it differently, in my opinion. Like in this one here, yeah, okay, I'm kind of seeing it, but like you're saying, like, is there really a lot of passive accumulation? Not really. Now this underneath here is showing something, but again, like it hasn't really traded, Like you said, a lot of times it can be really tricky where, okay, you might get a little bump, a stop run here, up into this level, comes back down, huge selling, and they'll tear right into this, and then right into lower liquidity as well. So, I mean, the idea in the context of the trendline break accumulation is that these buyers, these buyers, these buyers passively got filled, and they're slowing down the selling. And then we're waiting for key level, and then we're waiting for a break of structure on volume, on heavy volume, by aggressive volume in this case, to start driving price the other way. So that's the context of the setup. I don't think we can put it into like a kind of 1, 2, 3, 4, and I think that would be, in my opinion, PMAG more of like a nuance that you will start to identify, like how thick it was. I mean, heck, sometimes it's very thin liquidity, but the aggressors are massive, right? Or it's the opposite. It's huge levels of liquidity, and then it starts to break, but it doesn't take many buyers, and then price starts moving because there's no more sellers left. So that's the context we're trying to understand.
Yeah, there's so many moving parts here. So
Yeah. But you're seeing it and you're getting a knack for it here, which is really great to see. Because like here, like, I mean, you've been putting in the work, and your execution is getting really good. I mean, this is great to see. I mean, there's other nuances, like we were just saying. Will it clear this? I can't really see where that swing is. It looks like it's right around here, 72. Anyway, that was a nuance, about maybe waiting for it to break. But I mean, I think you did great.
Well, it's not gonna play out every time, right, Bruce? We want to use the 4 criteria to find our high probability area, put risk on the table, and then manage that risk.
That's right.
So it's gonna fail often, and it's gonna play out often as well.
Yeah, exactly. So, but the thing is, though, is because PMAG has now seen this many times over, and he's collected, not only has he traded it many times over, he has the data in a playbook. He's got marked up charts, and he can look at the data in the web journal, to see how he's doing. That's your edge. You're building out your edge. So at that point, like, now you're into the nuances of the trade, and that's where the grading part becomes really important. Get good at the nuances in here, and then if this isn't such a good setup in here, well, the way it's going to work in the future, PMAG, is you're just going to not put as much on this trade, or maybe you'll handle the stop and the take profit differently.
Yeah.
So maybe you'll look for like a smaller move up into, I don't know, another swing, up in here, or liquidity level up in here like you did, or if it's really good, you'd be holding, maybe adding into it in the future. Just we're just on the basics still, which you can even stop at the basics basically. All right. Let's see, Tom. I'm sorry, PMAG, go ahead.
No, I said thank you. I appreciate all the comments and feedback that you provide.
Sure,
Thank you.
sure. Tommy, any comments you have?
Yeah, I mean, the only thing I would add is that, I mean, it kind of depends on you, but like if when you see the low volume, like when you look at the low volume pullback, you want to see the impulse move driving away from the range, and then you want to see price pull back into the low volume node and then go higher again. And like what I, like based on my experience, if price pulls back in the range again, that means the price is accepting in the range. So, sellers could step in and bring it down to the liquidity. So, I don't know, Bruce, if you can draw I don't know if you can draw out the low volume pullback yet in the range around 69. So you can see that price is accepting in the range again, and then like what I like if you take many of these trades, you will see that sometimes if price pulls back in the range again, sellers can step in and bring it down to the liquidity. So maybe if you want to take like only A plus setups, you would want the low volume pullback, the low volume node to form outside of the range, and you would want to you would want to see price pull back into that area again, and then you would want to see buyers. So I don't know. That's just what maybe you want in the future. Maybe if you only want to take A plus setups, then you should look out for that. But and the other thing is that the stop loss is like as others mentioned before as well. Like for me, that would be too wide. So you want to see, you kind of want to put it just below the low. So you don't want to see price making a lower low. But that's just I think the stop is really wide there, and there's no reason to take that amount of risk if you're taking the low volume pullback. So maybe next time just put it below the the 7,670 area. But that's what I want to add.
Yeah, thank you. Appreciate it.
Yeah. No, I mean, I think your PMAG. First off, like fantastic stuff. You've really you're really improving. I mean, it's now it's exponential, the learning. Now you're into the nuances, and you're asking very specific questions, and look at your execution is excellent. I would just say there's some of the execution you can work on with like what Tommy had just mentioned about the stops.
Mhm.
So great stuff. So yeah, keep going, keep pushing, and keep questioning yourself, or asking questions and getting into the nuances, and that's where the expertise lies.
Thank you.
Yeah, you're welcome. Thank you. So let's move on, and let's see here. Okay, so that was from Moby, and let's move to see. Moby also covered Ray. So Ray, let's invite you up. Okay. You there, Ray? So actually, I think we went over this trade. This was from, I mean, this is the 20, no, in July. This is July. I think we might have gone through this one. It looks
It looks very familiar.
yeah, it looks familiar. Let's try it. Let's try another. It looks like we went through this one too. I think we went through all of these. Yeah, I remember this one. So yeah, I think never mind, Ray. Yeah, I remember giving feedback on this one for sure. The others look very well. So yeah, let's move on. Let's see here. Actually, we got Tomi already up here, so Tomi, we're going to cover you as well. Um, and I'm hoping this is a new one, right? Yeah, this is
Yeah.
okay. Okay. So I don't know. Was this you, Shark, who covered Tomi? Let me take a quick look.
Yeah, that was me.
Okay. Okay. So yeah, turn it over to you.
Um, this particular trade, Tommy, I see, you have everything, you have all four of your criteria identified. That top passive accumulation you have labeled in your text bubble, I don't see the passive accumulation there up high in that trade. Also, I don't necessarily think, that number exactly. I don't think that number 3 is, like Bruce said, there's nuances. You know, I think two really strong levels, or 5 levels, whatever. I don't think it has to be exactly 3, but I don't see the passive accumulation up there at the top of that one. I do think there's, you have some room over to the right of your chart where we could expand the axis and probably see more of the trade. But I don't see the passive accumulation up there. I also, that text bubble where you have labeled absorption, perhaps we can put that one somewhere else so that we're not covering up the price action in there. But I think,
I'm sorry. Where
yes.
this one, the absorption here, or which one?
Yeah, I would like to see what's under that
Yeah.
myself.
Yeah.
When I come back to look at my slide or go over it, I want to see what's there. Price, you have clearly marked, what is it? Previous close, like a resistance level there with the yellow horizontal line. We have some pretty strong buying breakout of that level, and not as strong selling at your trendline break that comes back in to test that level of resistance where you entered the trade. So yeah, I think we have a couple things there that makes me think sellers aren't too strong right there. Well, you labeled it on the bottom, right? Aggressive
Yeah.
accumulation is not the best.
Yeah.
So, sellers aren't super strong right there, and buyers were very strong at that level. What is it, 76.90-ish? So, I think there's a possibly not a super high probability TLBA there, but you saw it, you got in and you managed your risk.
Yeah. I mean, if you look at
And
the passive, yeah, sorry. I mean, if you look at the passive accumulation, probably like if you zoom in, like you can see 3 levels or even more than that. I just didn't mark it up. You can see it on the left as well. So if you see the absorption, like there's a bit of a passive accumulation there as well. I just didn't mark it. Yeah, that's
understood.
around there. Yeah. I agree. If you look at the buying bubble at the top, the passive accumulation wasn't the best. Again, probably if you zoom in, you might be able to see something, but it wasn't the best. The other thing is that, yeah, I mean, as I outlined on my chart, the aggressive accumulation was like, if you look at the delta bars on the left, you can obviously see that the buying delta bars are way bigger than the aggressive accumulation that I marked up on my chart. So probably this wasn't an A plus. So I mean that's why it failed. The reason why I marked out the absorption is because you could see heavy liquidity on the bid, and then kind of price went to that area. You could see like a few sellers stepping in below that, but they just really, I mean, it's really common that when they trade into heavy liquidity, you can see like, price might just chop around for a bit, and then you can like buy or step in, and that's what exactly happened. So probably like, my aggressive accumulation wasn't the best. I would say the passive accumulation was pretty good because even though I didn't mark up all the levels, you can see some of that on the left. And if you look, like cash open is right there, and when price, like when the market opened, like literally the whole AM session, people were getting filled on the offer. So you can kind of think that the big players are getting filled on the offer. So if you see aggressive sellers stepping in at a key level, there's a great probability that they might bring it down to one of the liquidity levels. But yeah, I mean, I probably, the aggressive accumulation should have been a bit like more aggressive, I guess. In terms of the passive accumulation, I think the 3 levels was there. I mean, obviously at the top you don't really see it, but if if you look it on the left, there's a few other levels as well that got filled. So, but yeah, I mean, I agree. I agree. That's why it failed, and that's why I trailed. That's why I got out. So I didn't wait for my stop to get hit. I just canceled my position. So
No,
yeah,
that's
that's why
good.
I did
Good
that.
trade management. I also
Yeah, I mean,
think, taking trades like this that didn't play out, marking them up, and then, coming back to them are really good opportunities to
yeah,
learn. Why did this not work out? What are the Bruce's word nuances, right? What are the nuances here? And why did
yeah.
this trade not play out the way you originally intended it to?
Yeah, I mean, this week, like, I'm not even looking at ES anymore. Like, I'm not even interested, to be honest, because the last couple of weeks and days, like,
It's been
nothing really
flat,
happens
huh?
on ES. Yeah, it's really slow. Nothing really happens on ES. So I'm looking at like NQ or gold, and I find like on NQ, price is moving way faster, and then you can see a lot of key levels, and then it's kind of, I don't know. I think it just if you look for a trend line break accumulation, you can maybe end like last couple of weeks, NQ has been pretty good, but I don't know. ES is like you can wait 2-3 hours and price is not even moving. It doesn't even worth to look at like last couple of days or weeks, but yeah.
Yeah, it's been super flat.
Yeah, exactly. I mean, even here, like you can see cash open, and then you can see like maybe the initial. No, it's like you can see the price around like 10 o'clock, and then what, like 10 points, like 10 points from the cash
Oh, what
open, like you don't really
one
see
other
anything.
thing, Tommy, I mentioned before, when you come back, or when I come back to look at a slide that I've marked up, I want to see some of what price did after I covered the trade. So, perhaps before taking your screenshot, you could let
Yeah.
price play out a little more. In this case, price continued to head north up to O2, right? Perhaps, in hindsight, this is possibly an LVP.
Oh yeah, actually, I think
So,
this one was like a low volume pullback, because if you see I mean, you can see the low volume node around like the 87, like 87, 90 kind of range, and then the selling is actually on low volume, and you can see buyers like stepping in, and then on the
that's a great
left.
level.
Yeah, on the left you can see like aggressive, like you can see the impulse move on the left. So if you see those like like delta bars, that's kind of the impulse move, and then you can see the low volume pullback. Yeah, and then you can even see the range on the left. So yeah, that's why I actually ended up canceling my positions, because I saw that, yeah, this could be potentially like a low volume pullback. So yeah, I didn't see the point to hold on to it, but yeah.
But price did continue to go up and consume
Yeah,
that
probably it
liquidity.
did. Yeah, I think it went up to the
Yeah. No,
figure.
no, it did.
Yeah, there's a great chance it went up to 7,700 and then maybe even higher. But as I said before, like if you look at cash open and you look at the price, like it's only 10, like not even like 15 points. So it's like
Yeah.
price doesn't really do much. And if you trade reversals, you want to see price like going, like you want to see price going in one direction, and then so if price doesn't really move, you can't do much on ES. So
All right.
yeah,
Well, great markup.
yeah, thank you.
Yeah. I think, Tommy, I really like that you included this one, and you're open to the feedback, and you've included losses multiple times, and I really like it because I think you can get better feedback, and so for example, in this one, like for me, as soon as I saw it, and I know this is the cash open down here, but like I kind of agreed with Shark, and then it's like, wow, buyers, wow, more buyers, right? Huge buying here. I'm not seeing a transition yet.
Yeah,
And okay, the structure broke, but it's kind of bouncing off of, kind of dip below it, but the range here, and then it's kind of coming back up, and you're starting to see that buying pick up right in here. So what I really like, I mean, to me, it kind of starts to scream about, looking like a low volume pullback. It's a pretty deep pullback for sure. And I think, on deeper pullbacks, you kind of look for, somewhere up in here, or the figure, like you had said, in that liquidity up there. So you don't get trapped in a range again. Anyway, what I was going to say is, another takeaway is, it kind of harkens back to a problem that you were having earlier, like, several weeks ago. And that is, not knowing if this area in here is turning into the reversal, or is it going to be a trend line break accumulation, or is it going to be a low volume pullback? And I know it gets tricky, and trying to understand this stuff in here. You do have that one big bar here, that's for sure, but not much here. But you do have the structure break, like you said, and it breaks this little structure as well. I know what you're looking for. You're looking for it to break this structure, and you're waiting for that volume to come in. Instead, it doesn't, and then so I don't know how this might help you is, like, I mean, this volume is so big, and like Shark had identified, the passive accumulation is not so good. Okay, some here, but like, it broke out, it traded through all that. Okay, we want to see it trade into that passive accumulation, and we want to see a reaction. Like here it traded up into, some, it didn't trade into, it traded into this, traded a little bit above it, and it rejected, right? So we want to see a reaction like that, and you can't see quite what happened here, but it looks like we probably got a reaction in here. We trade a little bit back up above it. So now we know the buyers are strong in here, even though that they're, the sellers absorbed that. It traded through once, it traded through kind of again, and then it made kind of a lower high in here for sure, behind this absorption, and then we see a lot more volume. So it's breaking out. I mean, this is how I kind of view it, guys. And I covered it. We've talked about it many times. It's in the video for the setup on the Learning Center. Let me just quickly reference that, so you guys, if you are new in here. It's not here. It's here. Okay. So just go to education and then scroll down, and it's here in the supply and demand setups, and the trend line break accumulation. So we really want to see, like, I really want to see that passive liquidity in here, like here, right? In this case, it's multiple levels. Now this was a big reversal, but it's multiple levels, and it's trading into, absorbing all that selling. Absorbing. We even get a little stop run here below the key figure of 2100, and then we see the stop run here, breaks the structure, and then we're starting to see those buyers coming in. Anyway, this is kind of what I had in mind with the passive accumulation. Up in here, in my opinion, like, it is less important unless you see lots of buyers back up above it. But we really want to see it absorbed down into these areas. It is, the way I look at it here, because in here, if it trades into it and through it, it's like, yeah, okay, we'll probably get a retest back to it, but it hasn't been absorbed. It hasn't slowed down the buyers. That's the point I'm trying to make. We want to see it, like, hit buyer, the buyers hit it and then see a reaction. So there's no more buyers after it. Does that make sense?
Yeah, it does. Yeah.
And then the oh God, what was I going to get to? Yeah, I can't recall. But then this we really can see the that kind of shift in from the aggressive to the passive. I mean, sorry, passive to the aggressive, and that's where like it's really helpful because and that's the context of it, and that's where like like it was during the live webinar, Tomi, that you took I think a trade and I didn't. And okay, I was blabbing about a whole bunch of other stuff, but it was pretty aggressive. It was something similar to this. There was some really good liquidity though that was filled up in here. That's for sure. That looked really good. And then it broke, but I didn't really see kind of a structure up here. And I think you got in right in this area in here on that trade. Hold on. You got in like right in here, waited for that little kind of break or something like this, and then the volume though was massive over here on the sell side, right? And so you took it down. That there was a big distinction there between that trade and this trade.
Yeah.
I don't know. I love it. You identified it and you corrected it. That's huge. And you're aware of it, and you've been every now and then you kind of it looks like you digress back. So I would say like for pilot program studies, this is the thing to continue looking at as your study every day. Like okay, am I looking for is it what's happening in here that turns it into what I'm looking for? Which trade is it? Is it reversal or is it continuation? And you get really good at that, you'll be just a master at it. In fact, like I look, this is for later, when much later, when maybe you get caught up in this still and you're you're a complete expert, but then you're like, okay, I am out, and if I see buyers come back in, I am back in for a low volume pullback, and then looking to take it back up, something like that. So I remember one of the this trader, this institutional trader was the best educator I've ever seen, was talking about what a lot of these market maker or institutional traders do is if they're fading the outside edge and looking for back into the mean type of thing, if they don't get it, if it starts to go against them, that not only do they flip out, they double their size or triple their size for the momentum move. So they're trading both ways basically. But anyway, that's a very dangerous thing to do unless you're really experienced, I think.
Bruce,
Yes.
Brannigan calls that paying. Brannigan calls that paying for information and then using that information.
Yeah, exactly. I mean, that improvement part. Like I say to you guys, I'm releasing this new website here for you for the pilot program. Having this kind of improvement plan, as well as a tilt protocol, not to go on tilt, etc., are going to be key elements moving forward. Yeah, just take the pain but learn from it. Yeah, Tomi, like I love it. Thanks for sharing this one, and I hope it helped.
Yeah, thank you for the feedback.
Yeah, sure. That's what we're here for. All right, let's see. Um, else? I think, do we have another one for you here? Yes. Okay, and crude oil, great. So, because I love it as well. You're talking about, well, I'm not seeing it on the ES. I'm going to trade something else. Fantastic. Here we got a good example of exactly what we just all discussed, right? Fantastic. So um, this is no, I'm sorry, Shark. You go ahead. I'm sorry. You're the coach here.
No, I don't have a whole lot on this one. I picked this one because it's an oil trade, which I think is pretty cool. ES is just flat.
Yeah.
Look to something else. I've never traded oil, but the passive accumulation here is exactly what you just talked about, right? Getting absorbed, price reacting to it. Then the next level, absorbing aggressors, price reacts to it. I think this is really good. The only thing I think I have to add, Tommy, and I think you mentioned it in your little write-up, is perhaps you're trailing your stop too tight. If you had been two pivots behind on this one, you would have made it to your target, which you
Yeah.
came very close to. So
Tommy.
yeah, I think it's great. Thank you for sharing it.
As I mentioned in my write-up as well, if buyers are obviously like if buyers are stepping in, and if the volume is not high, it's low volume, it could be profit taking, it could be many other different things, and I think in here like I trailed my stop like too aggressively. Maybe I could have left my stop just above the 82.5. So maybe like that way I'm still in the trade. I mean, in this one, like my target was like really specific. Like I see the liquidity down below, and if I trust my target, I see the volume coming in, I can just wait for price to get there. Even if I see like some buying coming in, it's on low volume, I don't really care because I see my target and I see sellers coming in. The other thing I wanted to mention is that you see the passive accumulation on the left. I mean, that's literally the only that's the only passive accumulation like in the after cash open and even like pre-market. So all the big players are getting filled up there, and it's their best interest to bring the price down because that's the way they make money. So I mean, I was just waiting for the key the I was looking for the key level here. It was overnight high, and then I saw sellers coming in. You can see heavy liquidity on the bid just right before I entered. And then I was waiting for sellers to kind of trade through that, and then I wanted more sellers to come in, and then I was just targeting the heavy liquidity. But you can see the aggressive accumulation here, like that's just really good. You can see the transition, and my target was really nice as well. And the way, like you can see that the liquidity that I was targeting came in like around 9 o'clock, so even before the cash opened. So you could kind of say that like many people wanted to like big players wanted to get filled down there. It wasn't just like algorithmic liquidity. It was actually like someone was trying to get filled down there, and then you can see the passive accumulation on the offer. I mean, literally the whole session, like after the market opened, people are getting filled on the offer, and I saw selling coming in, and it was right at a key level as well. So yeah, I mean, the only thing I probably could improve here is like the trailing the stop loss. Maybe if I see buyers coming in, it's not on high volume, it's still respecting the structure. I can just kind of stay in it and then wait for price to come in. I mean, eventually, like it's gonna hit the liquidity. But I obviously want to trail my stop because I don't, if maybe like I don't want to. If I'm in a winning position, I don't want to lose money on it. If I'm already in profit, like I don't know how many points, but yeah, I mean that's my view on it. But yeah.
Okay. Shark, did you have any other comments?
No, good work. I think I appreciate you sharing it.
Yeah, Tommy, I really like it. It's like you're looking at this and you're like, well, screw this. This is not. I'm looking for my setup. I know my edge. I'm going to look at other markets, and I think it's great. So You're looking for opportunities in other places, the mark or the setup that and you found it. And this is like, we started to mention, this is exactly what you want to see that you didn't see in the other chart, right? Just a note on the other markets before I jump in. Actually, 9 o'clock is the cash open for crude.
Okay,
9 Eastern. And this is kind of an important thing because if you are going to trade other markets, you look into your markets, know your markets, because like if you go over to the ags, you go into wheat, soybeans, or whatever, you don't want to be caught in those markets, and you should know, go through the contract specs over the CME, know the open, the close, know a lot of other things that can be really, really devastating trading those markets. Is you get limit up, or locked in to limit up or limit down, and there's a halt, and it opens up later, and you can just get annihilated. So you can't get out. Weather reports. What is the news? What is the impetus that market is reacting to? And really know that, because crude oil, or I remember in the States here, harvest is coming up, for example, with some of the agricultural products. How's it going? Or is there a drought? If there's a drought, you're going to see like corn just go through the roof. You're going to see some of the other ags go through the roof. If there's a flood as well that damages them all, of course, or some sort of insect. I mean, it's a totally different thing. So be careful with that, and know your markets. So enough said there. On this one, I really like. I mean, there's a couple different ways to. I'm just slicing and dicing it. I'm just kind of being hard on you. But I know you looked at this very aggressively here. I like it. This one here doesn't look as good to me. It's kind of wishy-washy in here, I think, and then it breaks out, but all this high liquidity up here all gets filled. You see the spike through, then you see it capitulate, right? So you're going to see the stop run up above in here, then it capitulates, and look at the heavy selling coming in. You noticed it. You noticed the structure break. Well, look at the volume delta bars. Okay, so really, really nicely done here, Tommy. And even we talked about you trailing your stops pretty aggressively before. You're trading a prop account, correct? It's not your own personal brokerage account.
Yeah, it's a prop account. Yeah.
Okay, so for that reason, you're trailing really aggressively, and because this is the way you have to trade those accounts. I just I'm worried, like kind of what Shark had mentioned, that you could have gotten more out of it, but yeah, you can always say that in hindsight.
Yeah.
But the worry is, like, if you don't believe in your setup, and that's I don't know if that's a worry for you or not. I think it's just the way that you're trading. And actually, I don't even mind that you. I mean, I think Shark's got a good point, but there is a swing down here, and you got kind of stopped out right at it, and it did come back up, right? But anyway, you had mentioned from the get-go, this was your target. That's what you're looking for, and you got stopped out along the way. So you can work on your stop management a bit, maybe, especially as you get to know the markets a little bit better. But this I think the nicest thing here, in my opinion, is this shift. You see all of this passive liquidity, and down here, look at that, this volume in here. This is totally different than the other chart. And that'll help you make that distinction, because you're not looking for it to come back up here. And you mentioned the key level as well. You got 83, and I don't know, it was a previous high or something.
I think it was overnight high.
Yeah. So there you go. There's the spike above and the capitulation and the selling. So yeah, really, really great stuff.
Your target, Tony, your target liquidity, Tony, is right at that previous swing low where Bruce had drawn the larger trend line as well.
Yeah. I mean, usually, like when I draw my trend line, like I want to draw it from the cash open. So I don't know if that's a good idea or not, but sometimes, like even if pre-market is a bit like choppy, if when the market opens and I see I see people getting filled, I usually just draw my trend line from there. I don't know if it's maybe I don't know if it's a good idea or not, but that's what I usually do. But yeah, I can see that. I can see the swing low, and I can see liquidity coming in right there. And with these kind of trades, when you see the liquidity at the bottom of the trend line, that's a good confirmation that there's actually real interest there, and people actually want to bring it down there. So yeah, I can see that.
That's a good question about drawing the trend lines. I think there's many ways to kind of slice and dice it. I mean, some people just say, like, I don't care. I'm going to go, if price went there, I'm drawing the trend line, right? That's that. And, so there 1, 2, and 3 points here. Other people like, well, I'll kind of draw this one, and I actually don't like that one. But your point about being the cash open or whatever, I don't know. I think where I'm going with this about drawing the trend lines is I think it comes around the significance of it. Is it significant? Like, this is a significant event right here, right? And we have high liquidity, we have high volume, we have a previous swing in here. I would use that as a point, absolutely. And you did. So that's the way I kind of look at it. If this was like overnight areas and there was kind of wishy-washy stuff back and forth, like, do you want to draw your trend line off of that? I don't know. Will it respect it? So like here, you can kind of see, if you drew that in there, it's kind of, you can see it just chopped around it. It didn't respect it. I guess maybe you can say it respected a little, but I don't know. If you get my point, like around the significant levels, significant order flow.
Yeah.
Okay. Let's see. I think that's it for that one. And that was it for you, Shark, right?
Yes.
Okay. Let's see. We've got Laura covered Nadia, but Nadia's not here. Okay. So we'll put that into the chat though, Nadia. And then let's see. I've got Nan and I've got Likai. I'm going to invite him up so I finally get his name correct. And it's been a while. So Nan, you'll be on deck here. So let's go over some of Kai's setups. Okay. Are you there? I don't know if he's here or not.
Hey, I'm here.
There you are.
I'm here. How's it going, guys?
Going well. So one more time, how do you pronounce it?
Likai.
Likai. Okay.
Yeah.
Okay. So let's see. You as well. Oh, one more thing in here. Zeno again put in some. Zeno, the 8.5 out of 10 was. If you can refer to, was it who this was for? Which ones? Because I'm not. I see the timestamp on it, but I forget who we were covering. Anyway, some really good feedback from Zeno in here. Okay, so let's see here. We've got low volume pullback. That's been your bread and butter. Yeah, we see the entry here.
Yeah, I do want to explain this a little bit. So if you look at the second screenshot, there's an institutional trader buying long-dated bullish call. So this trade is really based on that unusual flow.
Okay.
As soon as he slapped on that contract with that size, I'm gonna go in. I don't want to trade against him. I want to get a head start.
Okay, so let's take a look here. It was is it this the image you wanted to look at?
The one before this one.
One before, okay.
Yeah. Look at how much this is. I calculated this. Was $450 million. He slapped this contract at 7 a.m. And this is a longer dated bullish
one
call.
here.
All of them.
All of them.
Those are all from one trader.
Okay. Okay. All right. So you're looking at that level, and then you noticed it here.
Yeah, I noticed because the hedging process will start slowly, we're not going to get a clean impulse move, even though he slapped so much contract. So as long as the price start to grind up, I'm going to enter the trade. And you can see on the last screenshot, there's a very strong option flow impulse move. That was my impulse move.
Okay, so
it's shooting through. Yeah, it's shooting through the screen. It's way too strong. It's almost 90-degree angle. Yeah.
This one here.
Yeah, this one here.
Okay.
This is extremely strong. Yeah.
Okay.
This is the indication of that trade is coming through.
Okay. Okay, so it's kind of hard to give some feedback on here because the process for entry, it's not really low volume pullback necessarily. It's really an options trade level and then jumping on board. Is that right?
Yeah, but I still want to see those green bubbles. Those are just still hardcore evidence of this trade going to work, right?
Okay.
So that move after the LVP, this gave me more confidence of that trade is in effect.
Okay. Okay, well, the criteria we have for the LVP is a bit different. Like, I mean, this here, let me try to draw it a little bit better. This is where it broke. It broke above, right? Now, it didn't accept. Right. It didn't accept. It's not really much of an impulse move. There is some buying volume in here. But and then also, yeah, it broke here and it did accept, but yeah, maybe this one's not so bad. But like what really helps is when you see this kind of impulse move, and it breaks this structure here, right? So we want it to move away from structure, so it's clear. The idea in auction market theory is very simple. Like, you've got your chop value, and then something happens. In this case, you're spot on about, like, looking at options, yeah, you see a bit of reaction in here, but now you're seeing it, right? And then here's a little bit of a pullback here, just off the top of that one. But the idea in general is your chop. And then something happens, right? You get the impulse move, and then you get the low volume pullback, and then you're looking again for that impulse move and to unfold. So that way it's clearly driving away from momentum, and this has to be on low volume because it's just maybe some profit taking, maybe some sellers, but no one's messing with the buyers. And then the buyers come in for round two as soon as they see an edge in there. So it look. I mean, to me, I don't know. It kind of looks like you're kind of in the chop a bit, and it's up to you how you want to to trade it. But the idea is that to look for the move away and then to get in and then take it up. You did get another low volume pullback in here as well. There's a little bit of higher volume in here, but yeah, then it trades up to the 7,700. I don't know if that makes sense. I don't know if that's going to make any good sense for your feedback for your trading, because you're going to trade it probably this way anyway. I imagine.
I mean, I want to be honest. The LVP is very helpful because I'm using it as a sustaining move. Sometimes I'm not necessarily using it as a entry because the option give me the edge to go 3 minutes ahead of the move, right? So this is where I went in, and the LVP is a hardcore evidence of this move can be sustaining. So each of them play their part in my trading.
Okay. Well, I mean, yeah, you identify. I mean, what we just talked about, like you identified it here. I mean, here's the volume coming in, and so this confirms it. So you're just kind of wallowing around in here until it. I mean, this confirms it later, really, after your entry.
Yeah. So the flow came before this volume impulse move, but with that strong of a flow, and we have the print at 7 a.m. This volume is going to show up like this.
Okay.
And also, this is around the OPEX, the realized volatility is really suppressed. So a lot of times the impulse move will not be that clean, because the traders, the dealers, they're long gamma. They're gonna to suppress any movement. So prices mostly like to stay in a range. This is also my expectation when I see the impulse move. I'm not expecting it to go like before or after the OPEX.
Okay. Then let's see. God, I had a bunch of other comments and I can't remember them now. So what's the magenta line here?
Oh, that's just an NQ. It's a correlation.
Got you. Okay. All right, and then let's see. It looks like you took your profit. Yeah, exit right here. Yeah, I mean, you got a great trade. Absolutely, from like 86, 87 on up to you got 10 points out of it. Yeah, it did go against you in here. So this is something I wanted to mention. So okay, I understood your entry and why, but your stop loss at this point, like you're just gonna kind of let it wallow because you're really certain that this is going to unfold in your direction. Is that right?
Yeah, that was hero was like 8 billion. The significant level was 1.5. This is like 6 times the amount. So I just give it a little bit wider range.
Okay. Okay. Well, I don't know.
But I agree. I agree with you. I probably should narrow my stop loss slightly.
Well, I mean, there's a distinction. Here's a big distinction. And God, it's too bad John's not here today. And David, I would love to hear their feedback. But this is what I see. Like, so the entry is based off of something very significant in the options world that you're watching and following, and then you're just getting in. You're waiting for your confirmation. The confirmation for the low volume pullback doesn't really happen until later, and then like you're already in. So what I'm kind of suggesting, and maybe this is done through replay mode, is trying to wait for the timing of the order flow and the setup to match the options, instead of right now you're doing it the opposite way. you're looking for the options first, and then you're waiting for the confirmation in the setup to, kind of confirm you got it. And I don't know. I think this would help you. At least I would say in replay mode, try it out, because this is, you won't have to put up with the slop in here. You're waiting for the order flow to confirm it, and because there's no real key level in here really. It's just it's these transactions that are significant. So there's a lot of things kind of missing in the setup, and we're kind of waiting for that. And you mentioned it here. You show the volume in here, and when that starts to pick up, and that might help you really become a sniper, instead of it might be some fear of missing out, by just seeing it and jumping in, and then instead of waiting for it. And it's a tough one. I don't know the reaction of the options like that, so it's hard to kind of get feedback, because maybe this is where you'd want to get in, and then it went against you quite a bit. It came all the way back down to these swings down here, and then it finally broke, and it broke here. Maybe wait for look at it in different ways, but look for that significance in the volume. I mean, this is probably the best feedback I can give you. So I would turn it around. The options levels, and I think Doug Pless mentions this. It's like the options levels and the transactions get him interested. Then he waits for the order flow to align with it. Same.
I'll replay this. Yeah.
Yeah, it's something to take a look at. The same with Scott Pulcini. He looks at options levels as well, GEX levels, but he's also looking at stops and icebergs. So he waits for the stops and icebergs first as the significance, and now he's waiting for the follow through in the what he saw. So he wants to confirm it, and the order flow will confirm it. So that's he's going that direction as well. That's the best feedback I have. So I don't know if anything else you want to add, Li Kai.
No, I'm all good. Thanks for the feedback, though.
Okay.
I'm all good.
Tomi and Shark. Tomi, why don't you go ahead first?
Yeah, I mean, I don't know much about options. So yeah, but I can talk about the price action a bit. So why did you decide to exit at so yeah, did you see sellers coming in, or why did you decide to exit at that level?
Because that was a huge positive gamma. I don't want to cut into the chop.
Okay.
So when there, I was out. Yeah, and you can see the price action was chopping a little bit. So I just kind of take it off there.
I mean, obviously, like I can see like heavy liquidity around the figure, so that can be like a great target. Like, maybe even if you don't look at like option levels, you might just see heavy liquidity, and then you can just target that. But yeah, I mean, like I don't see the low volume pullback here. Maybe like because as you said it as well, you entered first, and then you kind of see the buyers coming in, and you kind of see the low volume pullback, and that's a great confirmation for you to stay in the trade. But we're using option levels, and I don't know much about options, so that's I can't really comment on that. But yeah, good job.
Okay, Shark.
Thanks, Tomi.
Likai, it sounds to me like you're very knowledgeable on your option levels, and you know exactly what you want. Your entry was based on them, your exit was based on them. I'd say, rather than come in and try and match it up with our LVP criteria, give it a name, give it a checklist, and then it's your trade. Take it, post it in the Academy channel, don't post it in the pilot program. And you could always point out where the LVP gives you that confidence to stay in your trade. But what you have here is really your own trade based on your own levels that you're looking at, right? We all view the market through our own lens, and it sounds to me like you know exactly what you're looking for to get in and get out.
Yeah, I probably should just post this in the academy. That's a good point. Um,
Yeah, give it a checklist. That way we can look at it and say, hey, this is what Likai's looking at as his key level to get in and his level to get out, and give it a name. Make it yours.
yeah,
Yeah,
It looks like a great trade to me.
I would like to just follow up. I mean, like, this is like, then you don't need Bookmap at all. I mean, like, we're here for order flow. We're here for getting an edge in the participants in here, the way that they're trading. And it's kind of derailing all of that. I mean, if it's just options and options, then, you know, I mean, this in here is the kind of the low volume pullback happened many times. I mean, there's one here, there's one here, there's one here, and there's one here, right? So, but he's just getting in, and then
Right.
and then just getting out,
I
based
mean,
off.
if we could zoom into that price action, that move right there, like you said, there's several LVPs in there, huh?
Yeah. I mean, like, there's multiple. I mean, you can see them. But anyway, this is it's just too bad. Like I said, we don't have John or David in here. The way that they trade it, like David, we know. John is looking at mostly at his options levels. I don't know what he would say about those transactions. David, he'd be waiting for this for sure. And then
And you come in heavy.
he'd come in real heavy. Yeah.
Yeah.
And he'd probably get out, like, he'd probably get out up here, I would imagine, or a good chunk for sure. Yeah, he's waiting for that momentum after that kind of move. So he is marrying those options to the order flow. And I don't know, Likai, that's just something that to look into. So
It's
let's.
kind of what we do with. Oh, I was just going to say it's kind of what we do with the other trade, right, Bruce? We're looking at a key level on a higher time frame, and then we're zooming into the order flow via Bookmap for entry and exits.
Yeah. I mean, it's the key level for sure. Then the order flow. Is that what you mean, Shark?
Yeah, exactly.
Okay. Yeah. So I don't know. Some food for thought, Likai.
yeah, no, I definitely understand. I mean, I'm using Bookmap also just like option is just one aspect of the market. I want to learn all of the aspect, right? There are days option flow look like a mess, right? And order flow is the way to go. So
Yeah.
that's why I'm here. Like,
Yeah.
you can't take one thing and say this is all market. It's wrong, right? It's you gotta use different aspect in different days.
Yeah. No, understood. I mean, the whole idea with the order flow and the edge that it offers is to being able to put like some reasoning behind it, like this move in here. I mean, that's going to be a big candle, right? Like a big green candle. And then, like, whenever the time opens up again, like, this is going to be another, like, green candle. Uh, uh, and we're being able to do with the order flow is look at it and go, what's behind that green candle? Okay, there's tons of volume. Great. What's behind, or where might we start to target? Okay, great. We have some ideas because that's where the sellers are. And then understand that context. So that's the edge in order flow, is being able to kind of see through that kind of stuff. And then the option stuff, is you're bringing in that to put together with the order flow. So yeah, I mean, you've been doing really great work, Likai. So and your journal forward testing. That was a forward testing journal. No, I'm sorry. Was it? I can't recall. But great stuff there. So this is the best feedback I can give you, is to try to wait and watch for it, and then put those two together.
Yeah, that makes sense. Thank you.
Okay. Let's see. Did I have anything else for you? Yeah, here's another one too. Okay. Let's get messed up with this. Okay, well, I'll just bring it over. Okay. Volume pullback. Okay, there's your exit. There's your entry. Volume pullback here. I mean, it's to me it looks very similar to the feedback we just gave. I don't see the setup in here for it. It looks pretty choppy. So even this move away in here, it retraced and chopped around in here, and then we see it retest again, and then it did break, and then it came back up into the swing up in here, and that liquidity up in there. In terms of a low volume pullback, like you could probably see there might be something in here, then maybe here and maybe here, but you can see it's pretty lofty at that point, and you're kind of trading right up into these levels up in here, and you can see what happened. It just chopped after that. I don't know. I'll turn it over to you, Li Kai, and walk us through the trade.
Yeah, so I wonder if we should just modify, just lower the expectation of the LVP doing OPEX, because what realized volatility mean? When realized volatility is extremely compressed, we're gonna see price stay in a range, right? And with this amount of 0 DTE options queue up, that frequency of pricing going up and down, chopping a range will dramatically increase. So like I said before, I'm not necessarily looking for a clean pulse move, because we're just not gonna get doing the OPEX. I'm just really looking for the strong option flow. And as long as we have a bit of buy volumes, I'm gonna go into the trade, because this is the price gonna behave in this specific period. I was talking to Tom the other day. He said this is order flow anomalies behavior during this period. You're not going to see extremely large, clean without liquidity green bubbles, yet the price going to lift.
Well,
I don't know if that makes any sense.
Yeah. I mean, it has been really choppy during this time, and it's two-way auction. I mean, like there's sellers, there's buyers, there's sellers, there's buyers.
And I want to point out one more thing. This year we have something extremely odd. Usually, implied volatility is always higher than realized volatility. Implied volatility is basically traders' expectation, retail traders' expectation of the market. It should always be higher than realized. Why? Because everybody's scared of the risk. But this year we have it lower than realized volatility. What does it mean? People want to get pain in a range. They don't even want to move out. Right, so this all sort of influenced my observations on the Bookmap. My expectation for any sort of setup would be very low, and as long as we got to move, I'm gonna go in.
Okay, so what made you enter here?
Can you switch to the second image? Second image. Yeah, so, so I want to point out one more thing. This year we have something extremely odd. Usually implied volatility is always higher than realized volatility. Implied volatility is basically traders' expectation, retail traders' expectation of the market. It should always be higher than realized volatility. Why? Because everybody's scared of the risk. They don't even want to move out. Right, so this all sort of influenced my observations on the Bookmap. My expectation for any sort of setup would be very low, and as long as we got to move, I'm gonna go in. Okay, so what made you enter here? it's a similar setup. We have a huge ping on the top, and we have this hero just going like this. And if you notice, below that huge ping, there's not much positioning. Above that huge ping, there's also not much positioning. Meaning what? Meaning if the market maker doesn't push us, retail will have extremely hard time going to those strikes. So if they want us to ping there, I'm gonna go with them.
Okay.
There's a term for this. This is called a theme book. On the left-hand side, this is called a theme book. It's basically we don't have any positioning. Retail will have a very hard time to push the price around. If the market maker has a huge strike, most likely the price will just get up there.
Okay, so a little hard for me to read this. I understand what you're looking at in terms of the transactions here and the strike and the levels here. But so yeah, explain, because I can't really.
Okay. I'll explain more. So when the move first started, that strike was 3 billion. When I entered, that strike was 5 billion.
Right here.
That's the reason for me to enter. Yeah,
5.88 is what it looks like, or something like that.
Yeah. But
okay.
before my entry, it was 3 billion. So it dramatically grow in 10 minutes. That is a significant heads up for me to say, hey, we're gonna ping there. They want to ping us there.
Okay, and then how do you know what level this is?
This is 7.6.
Is this price ladder here relates to it?
Yeah.
Okay.
Yeah.
So 760. Ooh, no, there's 50. This is the half. So 777 or I'm sorry, 7660 or something like that, probably, right?
Yeah.
Okay.
7665, I think. And you add like 20 handles onto that. That's 7685, probably on the 7685, around that.
Okay.
Right.
So then you're looking for 7685 up here. Or
up there. Right. But we don't necessarily eventually go to that strike, right? So I'm just gonna go in for that chase.
Okay.
I think we eventually get there in the day. Actually don't know how much premium was that day. Maybe just like 10 handles with the premium. I don't remember how much premium was that day though.
Okay, so it's 6.3 is where you got in, or around 6.3
Yeah,
or so is where you got
6.3.
in. But your entry in here was when you saw about 3 billion, you said?
When I thought it become 5 billion.
Oh, okay.
This is 5 billion already. Yeah.
So it had already painted this here, this 5 billion.
Yes.
Okay, and then that's when you decided, okay, I'm in.
I mean, yeah, it's almost doubled. Yeah.
I'm going to look for it trading up to that 85 or whatever.
Yeah. And also on the Bookmap, I don't see the liquidity on the 85. So I'm like, maybe just a chase, because sometimes you would track the price and not necessarily ping there. Right? There's no absolute. I always say there's no absolute levels. So I'm just using it as a confluence.
Yeah, I mean, I think that makes pretty good sense to me. Like if you're looking for, like, you have a swing up here, you have lots of liquidity up here, and it's a pretty decent move. So as kind of a targeting area, looks pretty good to me. That makes some sense. Yeah, and we got volume. Okay, this is all back and forth in here though. And then there's also this move that kind of defined it to begin with, the move down, and then we start to see that that volume starting to come back in again and again. It's back and forth. It's like you said. So yeah, I don't know.
This is This is just a classic like example of like when RV getting so compressed, the price will just act like this.
Okay. Okay. Yeah. I mean, I don't know. I don't know how to get feedback on this really. Just the same things again. It's just like this one's different than the previous one. But the entry just seems kind of in the middle of the chop to me. But you are looking for it to trade up to that options level.
Yeah, I was looking for 85, but it just doesn't show up. Even when we got close to 70, I was like, hey, show me something on the 85. I need to see liquidity. It's not there. So my thesis was like, they might reduce that strike. Sometimes they will reduce that strike in seconds. I have seen 10 billion strike instantly disappear in seconds. So I don't want to take that chance.
Yeah.
If it disappear, we're gonna take we're just gonna free fall. And I'm like, yeah, no. So I'm just gonna take off.
Okay.
Couple handles as I go. Yeah.
Okay. Well, that makes sense too, because like, yeah, that would be like, again, I haven't traded this, so I don't know. But I would be thinking that, okay, great, you got the spike, but there could be a counter spike, right? We don't know. What happens. But you're positioning yourself off of this data here, and then you are getting in. It's also kind of, I don't know, I'm trying to give you the best feedback I can in the most objective way, as quickly as possible, because we're actually over our time limit. But Li Kai, like, I don't quite understand how to evaluate the risk either, assess the risk in here. I know you have your stop down here, you moved it up and then started trailing, but it's for me at least, I don't have the studies to be able to say, like, when you see those events, I'm looking for it, you know, maybe the swing low in here is, I'm not looking for it to go below that. So maybe you are down here. I don't know. Maybe some way to evaluate the risk, because it looks kind of like a leap of faith to me that, oh, you know, I know that was a big you know, big options level. Therefore, I'm just getting in, it should work in my direction. You know, maybe you're hitting 90% of these. If that's the case, then you know, maybe you're fine with your stop. But I think that's some of the best feedback I can give you.
No, that makes sense. The stop loss makes sense. But on the strike though, it's not just the how many billions it got. It's like how big it is compared to other strikes.
Right. The
So this,
relative.
That's why this setup I mean, I've been using Spot Gamma for over a year. This setup I have doing like, I don't know, like 150, 160 times in this setup. It's above 90% win rate for this one.
Okay.
As long if it's double the size, yeah.
Well, then we go back to what Shark had mentioned. This is your own setup, and it needs its own criteria. And then how do you know? I think, you know, building out your own setup. You need to wrap the risk management around it, and the execution around it. So what is the criteria, and then what is the risk, and how do I execute? And then, you know, if you've got 150 examples, I mean, heck, you've got a ton of samples. So fantastic. Maybe you can really hone that into something.
Yeah, thank you, Bruce.
Let's see. Tomi, any comments?
Yeah, I mean, you know, Li Kai, as you said it as well, this is your own setup, so I can't really comment on it because this is not my edge. But I think if you come in here next week, you might be able to talk with John or David, and I think they can help you out. But I just don't trade options, so I can't really comment on it.
Okay. Shark?
It was the same thing, Bruce. Like you said, I mean, or like I said, you know what you're looking at, you know what you want to enter, you know where you want to get out. Make it your own trade. I do like what Bruce had said though, is using that as your level of interest and then looking at the order flow to zoom in. I mean, I honestly I don't know much about the option levels aside from what I see David and John do, which is super awesome. But John uses those levels as his key levels, and then he's looking at nothing but order flow at volume. He's looking at nothing but volume and where resting orders are to trade into.
Okay. Yeah, that's the best we can do for you, Likai. But you've been doing some really great work, and your journals look great. And yeah, keep pushing, and consider some of the feedback here. That maybe you turn this into something with your own criteria. I mean, really, the goal of the pilot program isn't to dictate like a specific setup. It's to learn how to build an edge using some of these simple setups. And that's, I mean, I think the simple setups that we have in there, you're going to see no matter what. They're going to materialize in one way or another because it's simply some order flow context. But yeah, so this is kind of from left field, and it's something different that you're looking at for your criteria to get in and execute. But maybe wrap it into something in here. Maybe you can find something where Bookmap can really help you on that.
I understand. Thank you, everyone.
Okay, great, guys. So we're over our time limit. Nan, you are on deck. We've gone over you, Nan, several times in the past, and so it's Likai. I think this is only his second time up, so it was good to have him in here. Others in here, if we didn't cover you and you put stuff into your spreadsheet, then great. Sorry we didn't get to you, but we will. Next time we always put it in the list that this is what we want to cover. These are the people. They've been putting in the good work. And that's the goal. You put in the work, we want to give you the feedback. Thanks everyone. Thanks for coming. Let's see here. Let's see, Shark, we've given you a last word before. How about Tomi? We'll give Tomi a last word here and take us out. And thank you, everybody.
Yeah, thank you guys for joining today. I mean, I would just encourage everyone to keep on posting. And I mean, there are a few really active people here, but it would be nice to see other people getting covered as well. So yeah, just keep on posting, and yeah, see you guys next week. Have a nice evening, morning, wherever you are. So yeah, see you guys next week.
Excellent. Thank you.
Thanks, everybody.